We are good to start.
Okay, okay, yeah, sure.
So give us couple
Oh,
of minutes, Riddhi, to formally
good
start.
evening, everyone.
Yeah.
Yeah, shall I start?
Yes.
So it's showing me that my connection is unstable. There's some issue. So if
Yes.
there is any issue, please let me know. Can you hear me all right?
Yeah,
Okay. Good evening, everyone. Welcome to the 99th episode of Friday Fleet. So before I actually talk about the topic as well as a speaker, I would want to call upon C. Kalpana Thakur, the founder of our Friday Fleet community, to share an opening remark.
Thank you so much, CA Sunita Rathod. I warmly welcome all of you on our 99th episode of Friday Fleet, an initiative of women empowerment. And I would like to welcome our esteemed speaker for the day, Riddhi. Welcome, Riddhi, on our platform.
yeah.
So
Thank you
my
so much.
so revenue recognition is from all the time is one of the critical and judgment driven area. And with increasing global integration, it is important to get the understanding of IFRS and US GAAP. And for that matter, we are having this discussion on our platform. I encourage all the participants to hear the conversation, our speaker thoroughly and interact, think from the practical perspective and ask questions. So this reminds me, Riddhi, how you would like to take. Will you be comfortable to take questions in between or can we take it at the end of the section?
Yeah, sure. So I believe that if we if I get along with the questions in the middle of the session and it doesn't disrupt the continuity, we will go ahead in that manner. But if it is like a too critical concept or somewhat like that, then we'll push the question and I'll note the question and we'll push it towards the end of the session.
Perfect. Perfect.
Yeah.
Thank you, Riddhi, for clarifying that. So, with that, without taking your much time, because all of us here to listen to our speaker, I would like to hand over the virtual stage back to our moderator of the session, CA Sunita Rathod. Over to you. Thank you so much.
Thank you, C. Kalpana. So as Kalpana has already talked about the relevance of revenue recognition and the part it plays, so I'm not going to repeat that, but I'm going to definitely introduce our speaker for today. So our speaker for today is C.A. Riddhi Thakur, and she's a seasoned finance and compliance professional with over 8 years of experience in accounting advisory, financial reporting, audit support, and global tax compliance. She is a chartered accountant and an IRS enrolled agent with expertise across US GAAP, IFRS, Ind AS, and US state and local taxation. She has worked extensively with global clients and CPA firms, supporting areas such as IFRS reporting, controls testing, audit readiness, GAAP conversations, and regulatory compliance. Her professional journey includes association with Deloitte, UK CPA firms, and advisory engagements across industries, including insurance, manufacturing, logistics, and finance. With a strong blend of technical expertise and practical industry exposure, she brings valuable real world insights into today's topic on revenue recognition under IFRS 15 and ASC 606. We welcome CA Riddhi Thakur to share her experience and her expertise. Riddhi, the stage is all yours.
Yeah, thank you. Thank you so much, Sunita, for a welcome. And thank you, Kalpana, for this opportunity. So, uh, it is a very good initiative. I must say that we get along with each other. And with this Friday Fleet, we get so much of knowledge we can share across each other and boost our professional skills as well as our competence for much newer aspects in the industry currently. So this is a great opportunity. Thank you so much for this. And yes, so I will just try to quickly share my presentation. Mm, Yeah, okay, here we are. So thank you so much, all of the participants to join. And yes, so without wasting much time, we will just get along with the topic. So whenever we go into any industry for maybe an interview or for maybe in any aspects in the advisory role or while any statutory internal or maybe any sort of audit, we always tend to get a major part of any business is generally the revenue. The revenue is the major. So, like any business with a profit motive will generally have a revenue, and revenue recognition across the journey, which was earlier and now it has evolved so much. So, it is uh, very deep, deep in the sense when IFRS 15 encouraged the 5 step model of revenue recognition. It went from like 0 to 100 times more better clarity, better disclosure, and a unified global standard. So, seeing the IFRS US GAAP also found out that it should be in the way that IFRS 15 is giving the revenue recognition concepts. It should be in the same line. So later on, the FASB US GAAP also made it aligned with IFRS 15. So nearly both the standards are much similar, but there are like divergence also. And definitely Indian GAAP is also in Ind-AS. We also have the same revenue recognition principles generally. So there are like one or two diversions or conversions are there, but moreover, it is the same across all. So, like IFRS is generally accepted accounting principles across UK and 182 countries. So, US GAAP also aligned its revenue recognition standards and disclosures in line with the IFRS. So, now this unified standard has transformed how companies recognize revenue. It brings clarity, consistency, and comparability to financial reporting across all the industry and jurisdictions. So, yeah, let's go. So, earlier there was a quite inconsistency across many similar kind of transactions were accounted very differently depending upon the industry, depending upon their cross-border comparison was like nearly impossible because UK GAAP evolved much earlier into IFRS. Later on, US GAAP also uh, made it into similar ASC 606 revenue recognition standards. So there were many comparability issues also. Uh, so earlier in India also, if we talk a little bit about Indian GAAP, because Indian GAAP we were learning since basics of our accounting. So in Indian GAAP also we had a revenue recognition that it should be recognized when it is earned and all the basic principles were there. But later on, we found out that we need to converge to IFRS. So we brought our standards as Ind AS. Ind AS is much, much, much more similar. So Ind AS is also 115 on revenue recognition, which is much similar to IFRS. So now the comparability issues are very much lesser as compared which we faced the burden of applying different standards resulting in in financial statements that were difficult to reconcile and there was no benchmark as such. So Earlier, there was also lack of transparency. There was absence of any framework allowed for significant discretion in timing and the amount of revenue to be recognized. So, framework, I would like to little bit uh, provide a framework. We can say a Hindi word is a structure or the dhacha. So, in Hindi, we say that a structure which is formed to make a concrete thing. So, framework is the main base of formation of any accounting standards. So, due to the absence of such framework, there was varied applicability across all of the industries. So now, the new era, we have Ind AS 15 and ASC 606. So, a converged global standard. Now, in May 2014, the IASB issued IFRS 15 and FASB issued ASC 606. Now, ma- marking this historic convergence of accounting standard setting, the standards replaced dozens of industry specific rules. So each of the industry had their separate set of rules, which were later on replaced by a core structure, the core framework standard IFRS 15. Now it is single principle based model of application to all the entities and across all industries worldwide. So it was effective since 2018. Now, the core principle is to recognize the revenue, to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange of goods or services. So the basics which we learned in Indian GAAP earlier are not going to change. But the timing of recognition, the documentation which we need, the disclosures which we need have vastly described into these standards. So in simpler terms, it is like recognize the revenue when control transfers to the customer and the burden is shifted from the risk and reward to control based recognition. So earlier, when the risk and rewards were transferred, we used to recognize the revenue, but now it has shifted to a control based recognition. So, who is having the control when the transfer is control? Uh, when the control is transferred to the customer, this is the core principle. Now comes the basic 5-step model, a universal framework. So, this 5-step model is very, very important in terms of any multinational company. If we go and if any person gives an interview on in the field of financial FP&A role or maybe accounting background role, revenue recognition is the basics. And even if we represent as a chartered accountant to any advisory or if we represent anywhere for any work related matters, this 5-step model are likely to be tested in interviews as well and likely to be tested in our real life as well, because this is the core of the IFRS 115. So this is the heart of IFRS 5-step model. Now, the model, what does it ensure? That it is consistent, transparent, and revenue is recognized regardless of industry or geography. So now the first step, very first step is to identify the contract with customers. Now, we need to determine whether whether a legally enforceable agreement exists that creates an identifiable rights and obligations between the party. Now, if it is not there, we will not be much able to recognize the revenue. So now the contract with customer is a mandatory thing. So in beyond a level, each company will need to have accounting team as well as the legal team to work together to determine each contract with customers and to ensure that it is properly stating all the terms and conditions so as to uh, avoid any further dispute on a later stage. Now we need to identify the performance obligation. So a contract might consist of multiple performance obligations relating to goods, relating to after sales services, or maybe relating to a particular set of services which are being provided. So goods or services or both, or set of any goods or services promised in the contract that customers can benefit from on its own and with other readily available resources. So basically, first thing, after we have a written contract, a legally enforceable agreement which is existed. Now we need to define the performance obligation, that depending upon what performance we will have, we will have to determine that what are the performance obligations. Like for a particular contract, if there are A, B, C, and D performance obligations, we need to distinguish between product A, product B, product C, and maybe a service E, service F, service G. So we need to distinguish each of the performance obligation as promised in the contract. So contract might not readily uh, define and distinguish each, but at step number 2, we will have to identify. Why? Because these are the steps with which we will have to determine the revenue recognized. So, first, to identify contract with customers, then to distinguish each goods and services as promised, we will have to determine the transaction price. Now, step number 3 ensures that we will have to estimate amount of consideration the entity expects to receive, including variable consideration, time value of money, and non cash payments, if any. Okay, so we will have to determine each, estimate the consideration the entity expects to receive with any sort of variable consideration, and if it is to be at a later stage, we need to also ensure that time value of money is considered in it. Now, at the fourth stage, we need to allocate the transaction price. Now, the transaction price should be allocated to each performance obligation. Like in our set of example, there were three products, A, B, C, and A, B, C products, and then D, E, F, maybe services, three services. So we need to allocate our total transaction price to each of the products and each of our services. So to distribute based on a standalone selling price. So, for example, that particular service, if sold separately, it is being charged at so and so amount. Then we need to allocate from the total transaction price that particular amount to that particular standalone service. So the allocation is based on the standalone selling price. Now, at the step number 5, we need to recognize the revenue. Now, when the entity satisfies each performance obligation, either at point of time or over the particular time. Okay, so that is the case. Now, we will move ahead. I may expect a few of the questions. If anyone has any questions, we can move ahead in that. Mm.
Yeah, hi.
Hi, Sakshi.
Yeah. First of all, thank you for the session. And I just want to ask regarding first step, identify the contract with the customer. So suppose like we are not like I think there are 5 points, and one of the point the consideration uh, should be certain at
Hmm.
the inception. So suppose if we are dealing with a customer with bad rating, so
Hmm.
should we uh, recognize the revenue on initial as should be recognized revenue once the performance obligation is completed, or should be recognized when we actually receive the consideration from the customer?
No, so actually, we will have to recognize the revenue once we satisfy the performance obligation, either at a certain point of time or maybe over time. So, maybe if the performance obligation is for 5 years, then we will have to recognize over the 5 years, depending upon how we provide our services or how we deliver our goods. But later on, if we expect that it is having a bad rating or so, then in in terms of Indian GAAP, we used to say that it will be a bad debt.
Okay.
Now, in terms of US GAAP and IFRS, now it is said to be the expected credit losses. Now
Okay.
the term has a little bit evolved. So it is said to be expected credit losses. So we can ensure that we have a provision for that set of amount, but revenue recognition does not depend upon the recoverability of the amount, if we are able to recover or not. So revenue will have to be recognized once we satisfy each performance obligation.
Okay, so means then why the point is there under the identify the contract with the customer that consideration should be probable?
Yeah, so while entering, we have a certain probability that if we are entering into a contract with customer, then surely we are expecting that we will get the inflow of the amount. So first we'll have to identify the contract with the customer, and it should precisely describe all the factors, that what is the transaction price and all. But later on, if it is not recoverable, then that is a very separate thing
Okay, got it.
than revenue recognition. Yeah.
Thank you.
Um, Hi. I
Yeah.
just
Hi,
want
Sneha.
to say hi, Riddhi. So the first thing is, the contract. So suppose there is a customer
Mm-hmm.
and we have started providing service to them, and the contract
Mm-hmm.
is signed couple of months later.
Okay.
So so the obligation, the performance obligation has been done from past 2 months, right? So
Mm-hmm.
does the revenue recognition start from the date of the contract or before the contract sign? Because the performance
हेलो
obligation is already,
हाँ जी सर बोलो
Yeah. Okay, Sneha. I got your question. So
हाँ पर प्रॉपर्टी
particularly,
पेपर्स और उन सब के बिना कैसे जमा के रखना बोलो
yeah. So particularly, what will happen is that standard prescribes to enter and identify the contract beforehand.
Hmm.
Okay, to make it legally enforceable. So the 5 step model, we cannot push ahead any sequence of it. So
Okay.
ideal situation, it must be, the contract must be before the supply of services we start.
Okay.
Okay.
So even if the
Yeah.
contract mentions that the effective date of revenue or the service provided is 2 months before the sign of the contract, what would happen then?
Um, so likely that will not be much legally enforceable. So we'll have to ensure that whether the legally enforceable agreement exists that creates the identifiable rights and obligations. So we'll have to first identify the contract. So if it is, maybe it is a past contract, then revenue should be recognized on the satisfaction of performance obligations. So we cannot push back that we don't have a written contract. We must have a written contract beforehand. But by any chance, if it is pushed to a later date, but revenue should be recognized when we satisfy that performance obligation, when the services are
Okay.
provided. But
The con
the Sequence of the standards, yeah.
So you mean to say the contract has to specifically call it out that the services were provided before the sign of the contract. However, the as a formality, the contract was signed a little later. So then we
Yeah.
can recognize the revenue even before the contract was signed. Correct?
Yes, yes, yes.
All
Yeah, correct.
right.
Yeah.
Thank you.
And maybe we can say that we'll not like just as in start supplying the services to the client. We'll have some sort of at least a oral agreement with the client, right? That maybe a written agreement was pushed back, but we had some sort of contract, oral contract with the client. So that does not like uh, breach the part that we just should not recognize the revenue until we have the written document.
So typically,
So,
what happens in a startup world, also in SaaS based, and given that AI, the way the competition is happening in SaaS and AI, right? So some of the
mhm,
customers may request for, we'll try you for 2 months, and then only we'll
mhm,
sign the contract, right? So we have seen such things happening, and where in the
mhm,
contract it is very specifically mentioned that the effective date of this would be a date before the sign of, I mean, the date when the contract is signed. So that becomes a
mhm,
tricky situation where the performance obligation precedes the signing of the contract.
mhm, mhm.
So those are the
So,
tricky areas.
yeah, yeah, yeah. In that case, Sneha, what I would suggest is in the prior period of 2 months, we must try to at least have a like a brief agreement for the starting of the services, that these months, in the 2 months we'll be supplying these sort of services, and depending upon the quality of service or whatever it may be, we will just renew the contract after 2 months or maybe end the contract. I believe that there should be some sort of preliminary contract at the inception of services. It must be there, yeah.
That's a prayer ask. Okay. Okay. I get that. Yes. Thank you.
I'll just wait for a few minutes, 1 minute, maybe if anyone else has some sort of question. Okay, maybe we will move ahead, and if we get questions, we will push it in the middle of the session when I get it. Okay. So, in this presentation, I have tried to involve much and much of case studies rather than providing you all a whole barrack of the thing. So, I tried to incorporate many of the case studies in order to bring much conceptual clarity to all of you. And maybe after the session by email, I will also forward all the barrack documentation and all the documentation which I generally refer to, and also I will try to provide all the documents which might be useful for a detailed conceptual understanding of the standard. Now, moving on to the case study. Now, this is the case study of Microsoft Corporation. So, it is a US company. Definitely ASC 606, beginning in the fiscal year 2018, one of the most closely watched implementation of the new standard. Um, Making it little bit more practical, when we buy a computer system, we will just start the system. Windows are always of Microsoft majorly, unless we prefer a Mac. Then uh, we just start and we tick agree, agree, agree in the all of the things and just finish this booting. But we don't realize that what we are signing. So all these aspects are very much useful when we go in the back end of the thing. In the back end, Microsoft also requires all of the all of the agreements from us in order to recognize their part of the revenue. So, as the company is built on complex multiple element agreements. So I just gave a very simplified product of Microsoft, which is OS, but there are multiple products of OS, Microsoft, which are bundled software licenses, cloud subscriptions. We use Microsoft OneNote, and there are many upgrades, many support services which we get. Then Microsoft faced significant accounting challenges under this framework because they will have to define into 5-step model, and they will have to segregate each transaction price and allocate it to the particular services based on the standalone selling price. Now, standalone selling price is also an important point. Now, the challenge is under prior guidance, Microsoft could defer the revenue from bundled offerings. So they were offering multiple bundled things and they could defer it. But now ASC 606 required re-evaluation of what constituted distinct performance obligation. So like there were 5 services maybe, and if one of them is completed, they will have to recognize their revenue when the performance obligation is completed, and how to allocate the transaction price among them. Now, the key impact is the standard accelerated the revenue recognition for certain agreements, particularly when the software licenses were deemed distinct from the ongoing support. Now, I have also added a numerical example beyond after this slide. So, the multiple support agreement and the software licensing, we have to segregate it, and then it will accelerate our revenue recognition process. Or the cloud services requiring significant judgment in allocation methodologies too. So now they will have to get a learned team, and they will have to also get an legal team for the drafting of all the contracts to make every distinct performance obligation easily distinguishable, because earlier it was very much bundled in that sense. Now, what is our lesson learned? Microsoft experienced and underscored the importance of robust contract review, definitely, process, and the need for finance teams to work closely with legal and sales to properly identify and document performance obligations. Okay, now this is very interesting example. I have taken it a very basic one. I have not added much difficulties in it. This is a very little bit of straightforward numerical. Now, the software company enters into a contract of $50,000 contract with customer to transfer what? Now there is a bundle, software license, perform installation, provide technical support for 3 years period. Okay, not 1 year, 3 years period. Now, the entity also sells the license, installation service, and technical support separately too. Okay, now we just feel that it must be every time in the bundle, but it doesn't happen. Many times the installations are done by another party and technical support are given by separate entities in software too. And maybe if I take an example of simple example of a product, that if we buy air condition and from online platform, maybe Amazon, and we can select both, that we want your installation services or we'll handle it by our own. So we can also find a local vendor who can install the AC. So there will be different. We feel that it must always be bundled, but it need not necessarily be bundled. Okay. So the entity also sells their license, installation services, and technical support separately. Software license usually are sold for $160,000. Installation is usually sold for 20,000, and the technical support runs 30,000 per year, and we are providing it to them for 3 years period. Okay. Now, the installation service and technical support could be performed by other entities. The software remains functional in the absence of any of the services. So, many times the software is just sold. Installation is done by us, by us itself. But these services are also provided by the vendor also. Contract price must be paid on installation of software. Okay. Now, which is planned for the March 1, year 1. Okay. We are expecting this example to be a calendar year. So, as all of the things are given in USD, we are assuming it to be a calendar year. So, Jan and Feb are gone. March and remaining 10 months for this particular financial year. Now, how the software company should recognize the revenue of the transactions. So for ease, we have listed software license 160, installation 20K, and technical support 30,000 for 3 years. If we sell everything standalone, we get a $270,000. Now, let's jump that how the entity will have to identify. There are how many performance obligations? Three. Particularly, first one is software license. Second is installation services. Third is a technical support. Okay. Now, we had, if it is sold standalone, the fair value is 2,70,000. But our contract price is 2,50,000. Now, after identifying each performance obligation, we are allocating the transaction price to each performance obligations. Now, how? In the ratio which we had earlier. So, we had software license, installation, and technical support. So, in the fair value ratio, we are just allocating the contract price. Okay. Now, for the software license, when should we recognize? So, when it is delivered and earned. When it is delivered and earned on March 1, year 1. Okay. Now, installation services, the allocated price is 18,509. When it should be recognized when it is delivered and earned. But the third is the twist. Technical support was for 3 years. So when it should be recognized, technical support should be deferred because it is earned over a period of 3 years. So starting from March 1, year 1, we will have to allocate it to 3 years. So in the first financial year, if we see, we will have to just allocate for particular 10 months only. Okay, for ease, I have given the journal entry. So maybe cash or bank debit for whatever total revenue we get on March 1 because the payment we will get early in March itself. But technical support is for 3 years. So license revenue we must recognize. Service revenue definitely we must recognize. But the third one was the technical support we should not recognize immediately. We should defer it when it is earned over 3 years. So I have deferred it to in the US GAAP, the word for unearned revenue is contract liability. So I have added contract liability for 83,333. Now, after allocating the transaction price, the revenue is recorded, the sale of license and installation at the time of sale itself. Now, the technical support is a service that will be provided in future. Therefore, the contract liability is recorded in the amount of prepayment given by the customer. And then revenue will be recognized on monthly basis as to support is provided. So there is a little bit of calculation provided here is 83,333 divided by 3 years have 36 months. So we will recognize it for 10 particular months. So contract liability will be debited and credited to the technical support service revenue. Is everyone able to get the same? Yeah, okay, great. Thanks. Um, yeah, that was an interesting and through numbers, it is a little bit long retained because just by reading the concept, we don't much get the idea of how to apply the five-step model actually. So I got that particular example. Now this is a little bit Airways Corporation example. Now they were the early adopters of the five-step model because they acknowledged the impending impact in the financial statements years before the standard's effective date. Now, the airline industry, with its mix of they have passenger tickets, ancillary services of baggage, seat selection, in flight purchases, and loyalty programs as well. Like, for example, in India, we have Air India Maharaja Club required any substantial judgment in applying the five-step model because each set of services are not as straightforward as we expect. Now, the key areas of focus included determining when control of flight services transfer, like at boarding, at completion of the travel, and how to account for unused ticket credits, like for example the loyalty programs which we have, and how to allocate revenue between the airfare and the ancillary services sold together. Okay, now this example is very much in line with the incident which I experienced, like recently in my Air India travel. I didn't realize at the time of booking, but they had their complimentary meals in it. So they were just providing a wrap with a muffin and a water bottle, which was complimentary from their side in the ticket fare itself. Now, how many performance obligations are there? Definitely two, that they are taking me from A place to B place, and also they are providing me food as well. Okay, so there are definitely the whole transaction price consisted of the meals as well. They just showed me that it is complimentary from our side, but it is already included in the AFA which I provided to them. So they will have to distinct both the performance obligations and allocate the whole transaction price into the particular heads of services which they provided. Now, JetBlue Airways invested heavily in strengthening their internal controls to support the estimation and judgment required. Now, estimation techniques like breakage estimates of unused tickets and loyalty programs required a sophisticated actuarial modeling and ongoing refinement. So, this is how they adopted the new standards because they were quite proactive in implementing it to their businesses for a better presentation. Okay, I have tried to incorporate case studies which are generally of softwares and services because they are a little bit more complex kind of transactions as compared to the transaction of goods and services which we have in our day-to-day life. Like this case studies of Salesforce. Salesforce, as we know, is a global leader in cloud based CRM solutions, presented a particularly complex case because its business model is combining multi year subscriptions, professional services, implementation support, ongoing platform access support required for a comprehensive overhaul of revenue recognition policies and supporting systems. Now, the subscription revenue complexity was like Sneha gave an example of SaaS company. So definitely there are multiple SaaS companies which face quite many difficulties in their day-to-day operations regarding how when to recognize the revenue, How to recognize the revenue? Now, multi-year SaaS contracts required careful analysis of whether the revenue should be recognized ratably over the contract term or at a specific milestone they need to recognize, and particularly when implementation services are bundled, it becomes more complex. Now, professional services integration, determining whether implementation and consulting services were distinct from the software subscriptions and therefore separate performance obligation required significant judgment and documentation. So definitely for IFRS and for US GAAP, the documentation is very important to document each and every contract, because later on at which point of time we don't know that when it will cause a trouble to us. Okay, so that is why these US companies example I'm taking, because they proactively handled all these situations and are very good at their uh, recognizing their revenues. So Salesforce had to ensure its own data management and ERP systems could capture, track, and report revenue in compliances with the new standard. A substantial technology investment is definitely required, a substantial legal team investment, like also employee training cost, everything is quite much required for application of IFRS and US GAAP for revenue recognition, definitely. Okay, the impact, increased judgment and enhanced transparency is the major impact of these standards, because it represents more than technical accounting change. Okay, so they reflect a philosophical shift towards a greater transparency and comparability. Like, oh, greater judgment is required. Now, entity must now exercise significant judgment in identifying their performance obligation, estimating variable considerations, and determining standalone selling price of each of the areas previously governed by more perspective rules, like when it is earned, and earlier it was very liberal in that sense. Now also there are enhanced disclosure, because the standard mandates robust qualitative and quantitative disclosure about the contracts with customers, providing financial statement users with far more insight into revenue streams and their related risk. Operational investment, definitely it is more, because we have to heavily invest in internal controls, data management infrastructure, employee training to meet the ongoing demand of compliance and accurate financial reporting. Okay, now what is the future of revenue recognition? Because it is always a continuous adaptation. Because revenue recognition is a core part of financial statements. Now, I will just give the key takeaway on it. Like, these are not a one-time compliances. So it is not that one time we just defined everything. We have the SOPs on hand, we have the internal controls, because this standard represents a living framework that demands a continuous learning, a robust system, and a culture of transparency, all in service of providing investors and stakeholders with most accurate comparable picture of company's financial performance. So I'm not going much into detail that how it got implemented, because the past is a past, but I'm just focusing on the futuristic key takeaway, because we have to continuously adapt, we have to continuously form a system, a framework in our organization to apply these standard and to provide the financial statements with perfect disclosures, with accurate disclosures and all. Okay, yeah, definitely both standards have some key differences. Okay, but like majorly what we discussed remains the same. Okay, so that is the case for IFRS 15 and IFRS 606 and the impacted industry. Now, the licenses of intellectual property. Now, IFRS 15 says to recognize at a point in time or over time based on the nature of license. While the US GAAP says that same core model, more perspective guidelines on functional and symbolic distinction, and they have a particular set of guidelines on ASC 606. Now, the industries are software and pharma industries, whereby the licensing of intellectual property is the most affected industry in that sense. Then comes the sale with right to return. Revenue recognized only to extend probable no return refund liability. Now, same under the US cap, what they say is slightly different probability threshold is there, like probable or constraint. So, a retail and a consumer goods industry will have to see that which standards they are applying, and if there are sale with right to return, then they will have to see a little bit of detailing in the US GAAP that whether it is probable or constraint or whatever. Then comes the consignment arrangement. Now, IFRS 15 suggests that consignment arrangement revenue on sale to the end user, no revenue on transfer to consignee. While under the US GAAP, we have the same but with additional indicators which are prescribed in details in the US GAAP. Distribution and heavy industries are most impacted industry in that sense. Then there are license of intellectual property and license of usage based royalties. Now, license only recognized only when as subsequent event occurs, exception to constraint. Okay, and under US GAAP, same exception, but there is an explicit guidelines provided in ASC 606. So when there are royalties involved in music, publishing, pharma, and all, we will have to see deep down in it if in case of US GAAP we are following for US companies. There are contract cost, which are under IFRS, it is incremental cost of obtaining plus fulfilling. If fulfilling a contract capitalized, if it is recoverable. While under the US GAAP allows a practical expedient to expense if the amortization is less than 1 year. So few service industry and SaaS industry will have to see their contract cost depending upon which gap they are following. And disclosure, like IFRS 15 has quantitative, qualitative, and little bit of less perspective driven. It should be quantitative and qualitative. But under US GAAP, they will also have to follow the more detailed SEC regulations driven disclosure for public companies. Okay. So listed companies, if in US GAAP or if in IFRS, will have to see that if they need to follow this SEC or not. Okay, now common pitfalls where we fall because we have some judgmental areas. So I'm just described a little bit of high risk and medium risk. I have listed them. The first is identification of performance obligation is very, very high risk because bundling distinct items into one, that should I consider it as one performance obligation, or failing to combine series of misstated revenue timings. So it is very high risk. It carries a lot of judgment. Okay, then SSP estimation is the standalone selling price estimation using the list prices indicated in the actual transaction and ignoring the discount in standalone selling price allocation errors happen, so it is very high risk. We need to develop a accurate SOP on it, and we need to allocate it properly. Then is the variable consideration constraint, like recognizing full amount without applying a constraint, overstated revenue, potential restatement will be required. Then comes control versus risk rewards. Defaulting to old risk reward thinking, we have risk and rewards are transferred and we have a wrong timing in bill and hold while consignment. So that is also a little bit of risky area. Overtime method choice, like there are many methods prescribed in the standards, like output method, input method, which method to use, which are the level 1, level 2 indicators in it. So there is also a little bit of risk where we may fall into the trouble. Now, contracts, when it is modified, treating the modification of contracts as new contract, or there should be cumulative catch up, or there should be prospective or retrospective impact. So that is also a risky area. Now I have just listed a little bit of disclosures. Now there are also disclosures of SEC, and we have additional disclosures, and IFRS 15 disclosures are qualitatively focused but equally important. Okay, equally comprehensive they are. Now, this disaggregation of revenue, contract balances, we need to disclose everything. Performance obligations like NTE, nature, timing, and extent of the uncertainty, and all we need to um, see in it. Depending upon which GAAP you are using, IFRS or US GAAP, or maybe Indian GAAP, the disclosure requirements vary, but these are moreover the same, which needs to be definitely covered. So, thank you very much, all of you, for patient listening. And we can see now Q&A if anyone has some Q&A on it. So we can have a Q&A session. Any questions on the topic we discussed?
Yeah, hi Riddhi again. Riddhi, I just want to know means any situation that you have faced in real life regarding this standard. Can you please uh, tell us?
Yeah, sure. So in real life, like I have worked onto the projects whereby a US GAAP, like a small US GAAP company was converging to IFRS because they had a presence in UK and multiple countries in the Europe also. To conversions, while we were handling the conversions from US GAAP to IFRS, there are many type type of disclosures, many type of pitfalls like we discussed. So we have to see that which gap provides what standards, and in the revenue recognition we need to clearly define that the procedure is definitely must be followed because it is mandated by the standard. And post that we will have to definitely see on the disclosures part and deep dive into that what IFRS disclosures are required for the entity. The entity also had a consolidation of three subsidiaries also. So whether the subsidiary is also complying with the revenue recognition standards. So in practical life, what we need to do is we need to draft the proper SOP working papers, and we need to check with all our audit procedures that if it is being followed or not. So
Okay,
that's the one of my incident. Yeah.
thank you so much. And it was a wonderful session. Thank you.
Thank you so much,
Yeah,
Sakshi.
I just want to ask you told us in the starting that you'll be sharing the drafts of standards or the documents that should be referred for IFRS understanding.
Yeah.
So where to share the email ID for that?
Mm, Yeah, I think that you can maybe drop to coordinator and I will circulate it to the coordinator and we can
Okay.
share it across all of the attendees. Yeah.
Okay, thank you so much.
Thank you, Sakshi. Thank you for the feedback, Sneha. I got it. Thank you so much.
Requesting all the participants, if you are having any questions, you can ask. Okay, so Sunita, we are having two announcements to make. So we will take this opportunity. So about how we are going to celebrate. Just excuse me for the background noise. My elder son is having cold, so he's coughing continuously. Uh, and before everything, congratulations, Riddhi, and thank you so much for such a uh, detailed discussion about the revenue recognition.
Yeah, thank you so much. Thank you so much, everyone, for the opportunity. Thank you, Kalpana, for the feedback.
Yeah, so now, Sunita, I would like you to share about how we are going to celebrate our 100th virtual episode. And then I'll announce about the offline initiative that we are going to start from this month.
Thank you, Sri Kalpana. So, since for us, our community matters, so our 100th episode, which would be a mm, landmark in itself for us, will be celebrated with our community. With Mother's Day also being near, so what we want is we want our community members to join us on our 100th episode and share how they have balanced their professional achievements along with taking care of their family commitments and being mothers in their respective areas. So this is what we want our community to come together with us and share their experiences. Be the center of the stage over here, share the experiences, have the youngest generation, the younger ladies who are there who are yet to step into motherhood as to what are the challenges that you might face and how you should be adapting to them and growing as people and providing that comfort to your family and your kids as well. So, how to be that all rounder and yet be make a space for yourself in your respective fields. So, this is a open invitation to all our community members present over here that please we'll be sharing a communication in the group. If you have not joined the WhatsApp group, please join that and be a part of this process, be a part of the conversation and the hand holding that we want to provide to our community of the younger ladies, the younger aspirational mothers, and also for people who are actually going through the journey of motherhood, how to balance this out for themselves. So we want to hear it from our members. We don't want to call any speaker to talk about it. We want you all to take the stage and share your comments, your experiences, and what has worked for you, what you're struggling with, and would want support from the community, and take this journey hand in hand. So this is what we are planning for our 100th episode, and we welcome you all to be a part of it, to be the center stage of it. I will hand over to Kalpana for the other announcements. And before then, we have a vote of thanks, a formal vote of thanks for our speaker as well. Kalpana?
Thank you, Sunita. That sounds interesting. Celebrating our 100 episode milestone by our member together with celebrating the motherhood, the journey of motherhood. Now I'm here to announce something special. We have been into journey of um, taking the stage, making impact in your life through virtual session. And now we want to take it a level ahead. From this month, from May 2026, we will be conducting once in a month a session not a session, we can call it a workshop, a drive, financial literacy drive, where we will be visiting NGO or education institution or a slum. And this will be started from Delhi NCR. And we have started, we have shared, just made that announcement in our WhatsApp group. Those who are in Delhi NCR region, you can join us. You can join that WhatsApp group, and we will share further information on which date, what we are doing, where will be the venue, that first event will happen. So do keep track of the announcement that we will be making in the group. We are looking forward to this another journey that we are going to embark, and we want your support as you did in this. From last 2.5 years we are together, and we look forward to make this journey till eternity. Thank you so much. And with that, I would like to hand over to Sunita for the formal vote of thank. Thank you, Sunita.
Thank you so much. Kalpana, I'd like to thank our speaker, CA Riddhi Thakur. Could we have a certificate of appreciation? I'm so sorry.
Yes, I'll share.
So we deeply appreciate and we're grateful for the time that you've taken out of your busy schedule and taken this hour out and shared your knowledge and experience with our audience. Thank you so much. It was a detailed session, and I trust and hope that our audience has taken away a couple of takeaways. So you need to get in-depth knowledge of whatever you are talking about. If only 1% or 10% of what has been discussed is a takeaway, that is good enough thing for a session. So I just hope that one takeaway has been taken by each one of you. For me, it was the fact about recognizing the contract. That contract can be verbal, oral, or implied. So until you understand that aspect of it, the first step of the journey is you'll be hampering, you'll be diverting. So that was something that made impact for me. And I'm not actually working into this field, so that was the kind of thing that caught my attention. Yes, if I need to work on this, I need to make sure that I am concentrating on the first step of the ladder and the obviously gentleman. So I just hope that it was as influential and impactful for the other members. I'd like to thank our team who make it possible for us to come every week and share the stage with our speakers to come and guide you and take you through their journey. Last but not the least, I want to thank our audience, our community, without whom this would never be possible. We would never be able to come over here and have these sessions going. So thank you, each and every one of you. Have a wonderful weekend ahead and a lovely evening. Before we wind up, just want to share that we want you all to be there on the 100th episode and share your experiences of your growth and your journey as mothers and as professionals, and obviously be a part of the drive that we want to make and the impact that we want to make as a community together in the offline. So thank you all. Have a great weekend and happy Friday.
Thank you, everyone. Looking forward to have you all on our 100th episode. Thank you, Riddhi, once again. Thank you, Sunita.
Thank you so much.